What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me today. Today, I want to go over with you the trade I took on gold today, which is Tuesday. Okay. Now, the screenshot we're looking at is one of several screenshots I sent to the Discord group last night just to show you guys the pairs that I'm watching, right? And then when I woke up today, and I saw what took place over the course of the London session, all right, I was able to narrow down my watch list to just one pair, and that one pair today was gold, okay? Now, what we're looking at with this screenshot is the simple master pattern template, okay, which consists of a peak formation followed by a peak formation followed by higher highs or lower lows, all right? So you can see here we have day one with our peak formation low, day two with our peak formation high, and then right here in the Tokyo session, we have lower lows, right? Now you can see we have this trend line applied, but we're not truly using this as a trend line. It's more of a visual aid to help us identify when this market may be shifting from the front side of this move to the back side of the move, okay? And what that means is the front side is when we're going up, the back side is when we're going down. So on the front side, we're making higher highs. And as long as this market is on the front side, we're going to be looking for dump and pump scenarios in the session that we're trading, okay? And then when this market flips and we're on the back side and we're putting in lower lows, now we are looking for pump and dump scenarios in the session that we're trading, okay? So we have step one, step two, the step three. I would like to see these lower lows taken out, right? I want to see more lower lows put in because that tells me we're still going lower. The low of the day may not be locked in place yet, right? And when I woke up this morning and I saw the London session, you can see, right? We took out those Tokyo lows, put in new lows. So this market is still putting in lower lows. Okay. If that's the case, if we're going to be putting in lower lows, I'm looking for pump and dump scenarios on the day, right? Now you can see we have this red line representing the Tokyo session highs. That yellow dotted line is actually the previous day's closing price. And you can see we had our signal here, this close and breakout. A close and breakout is when the market closes above or below the extreme of the previous day. So you can see here's our high of the day here. This market closes above that high of the day. That's our close and breakout. That's a signal for us, okay? So this right here is what allowed me to narrow down my watch list. All right, when I saw that we were still putting in lower lows, I said, okay, I'm going to watch gold today and look for the pump and dump. And you can see going into this New York session, we were pumping up from those London lows, okay? Pumping up into the session, okay? We pumped all the way up till we just pipped through that Tokyo high, okay? We're back into the closing price area from the previous day, right? And then you can see this market put in this little lower low on the inside. And that for me is the clue, letting me know that the market may want to go lower. Okay, so I took the safe and secure entry here when we broke that lower low. You can see this is sort of like our M formation. All right, and I simply am waiting for that middle structure of the M to be broken, okay? I did not try to get in up here. I didn't try to get in way up here at the high of the session. All right, I waited for this extra confirmation, this extra confluence of this level being broken. That's where I took my entry. I had a very tight stop loss. I closed the majority of this position right here, right around 100 pips when the market started bouncing around a little bit, okay? I left two positions running in this market that managed to take another 60 pips out of the market, but it was really insignificant, right? Because it's just the runners. So really, I took 100 pips with size out of this market today. All right. Now, congratulations to any trader who also took this trade today. I know that some of y'all slapped the NASDAQ today, so pat yourself on the back there. Now, listen, something I've had to learn over the course of my trading journey is that greed will take you out of this game quickly. Okay. It will sweep the legs right out from under you. All right. A lot of us, all we can think about is hitting these 100 pip, 200, 300 pip trades. Okay. We're constantly swinging for the fences, trying to hit that home run, trying to hit that grand slam. Okay. That greed is going to take you out of this game. All right. Base hits win games. All right. So inevitably, you are going to leave money on the table. There's no such thing as a perfect trader. Okay. You are always going to leave money on the table. It's inevitable. You have to simply accept your gains. Okay. And the bottom line is nobody's ever went broke taking profits. Right. So for me, if I'm trading gold, if we hit 50 pips in profit, bro, if we hit 100 pips in profit, I'm seriously considering shutting this trade down, taking the money, and running away. Okay. If I hit 75, 100 pips, 150 pips in profit on an index, I am looking to shut this trade down at the first available opportunity. All right. Just take the money and run. Like I said, greed will take you out of this game quickly. Okay. Base hits win games. Until next time, man, I hope you continue to free your mind.